glad to have you back now. This time we'll take a look at the money market segment of the market. Specifically, we'll be looking at the treasury bill. I will be looking at the opportunities in this segment of the market. And joining me to take a look at this is the Executive Vice Chairman of High Cap Securities. Thank you for joining me, David Adonri. Thank you for your time, sir.
It's a pleasure. Happy to be with you always.
Yes. First, a lot of Nigerians, low-income earners, do not know what investment in money market is. Can you educate us a little bit? What exactly, especially the treasury bill investment? I understand there are a lot of opportunities in there in the treasury bill sector of the market. Tell us about these opportunities.
Okay, treasury bills are short-term financial instruments issued on behalf of the federal government by the Central Bank of Nigeria to borrow from the investing public with a view to financing recurrent expenditure shortfall by the federal government. So it is as simple as that. So, but these instruments are generally offered through what we call primary market operators in the money market.
All right.
Essentially banks and discount houses. And so if the federal government is expecting some income from tax revenue, and in the interim that expectation has not been met, so to cover the revenue shortfall most of the times, the federal government issues what we call the treasury bills.
All right.
So they are short term, and they usually come in longest. And these instruments, they are debt instruments or fixed income instruments,
Okay.
but they are issued at a discount to the face value.
Okay.
So if, for instance, the par value of the treasury bill is 1,000 naira, and if the bill is paying an interest rate of 10%,
All right.
that would be about 100 naira
10%
of that
on-
face value or par
Okay.
value.
Okay.
So that would be about 100 naira interest
Okay.
on the 1,000
On the
naira
1,000,
at,
the face value.
that was
Okay.
borrowed by the government.
Okay.
So if the investor is subscribing to this instrument, the investor will pay 900 naira.
All right.
So that is why it is said that it's an instrument that is issued at a discount. Remember I said the face value or the par value is 1,000.
1,000. Yes.
So when you as an investor, if it's issued at 10%, so you deduct the interest upfront,
100 naira.
100 naira. So you only be paying 900.
900 naira in this case.
Yes, when you are buying this instrument. Then at maturity, when the borrower is redeeming, the borrower, this being the federal government, is redeeming the instrument, they will pay you the full face value of 1,000 naira.
Wow.
So if you look at it, therefore, you see that the yield, even though the interest rate at which it was issued was about 10%, but the yield is actually higher than 10%. Because you are
Okay.
going to divide the 100 naira by 900 naira that you actually paid. And you see that the yield is in the region of 11, 12%.
Wow.
So that is a big advantage in investing in treasury bills.
Okay.
I also want to
all right.
mention that
Okay.
the treasury bill is not just an instrument used by the federal government to borrow on short-term basis from the investing public. It is also an instrument used by the monetary authority.
Because that's where I'm going. Because
Okay.
we do know that sometimes the central bank uses this avenue to mop up, okay, excess liquidity in the market. And so, you're saying the same can be used as a debt instrument. Borrowing, of course, the federal government using this avenue to borrow.
Yeah.
And so, at the same time, using it as an instrument
So
to stabilize, inflation.
Yes, so the central bank uses treasury bills as a monetary instrument to effect monetary policy in the economy.
All right.
That is that if, for instance, the central bank wants to embark on a tight monetary policy, what it does is to sell treasury bills to the authorized dealers and indirectly to the subscribers. So through such sale, a lot of money is mopped out of the system. So that is tightening money supply within the system. And money supply within the system can be tightened for several reasons: to effect price stability in the economy, that is combat inflation, or it could also be used to stabilize the foreign exchange market to make sure that the exchange rate is stable. So treasury bills are not just financial assets that are used to borrow money from the investing public. They are also used to effect monetary policies.
Most times it will seem that banks, commercial banks, are the only institutions or firms subscribing to this treasury bill in most cases. How do you think the low-income earner and an individual Nigerian man or in the street can subscribe to this, take advantage of this instrument?
Although the market for treasury bills now is a wholesale market, it's not a retail market, but I know that a lot of the banks have devised some programs that enable small or retail investors to be aggregated through some products to participate in the treasury bills market. So if a retail investor is interested in investing in treasury bills, what such an investor has to do is to approach an authorized dealer.
All right.
Authorized dealer who are generally the banks. And like I told you, discount houses too are authorized dealers. I don't know if discount houses are still operating. A lot of them have actually converted to merchant banks now. So they can then access the treasury bills through various products that these primary market dealers have assembled to enable, to aggregate a lot of retail investors. But the federal government, too, understanding that there is the need to separate activities in the money market and in the capital market, also came up with a product in the capital market, which is the federal government savings bond. Essentially is a modified form of treasury bills that
because that's where I'm going. What is the difference between treasury bills and, of course, bond?
Yes.
So we have the federal government bonds in most cases, and then we also have the treasury bills.
Yes.
So how do we differentiate between these two instruments?
Okay. First and foremost, the treasury bills are for the wholesale market. From the regulation, from the perspective of the regulation, the minimum investment in treasury bills is about 50 million naira. And you'll agree with me that this is beyond what retail investors can afford. Hence, the banks or the authorized dealers have come up with programs to aggregate them. But however, there is federal government savings bond that is also a debt instrument used by the federal government to borrow from the retail investing public. And the federal government savings bonds have tenors of about 2 years, a year, or 3 years. But with the way they pay their coupons, or what we call the way they pay their interest, is on quarterly basis. Okay, so which is more or less like treasury bills that are rolled over on quarterly basis. So the savings bond is more or less like a treasury bill, because treasury bills, a lot of them are per quarter.
Okay, so we can say that treasury bills are within the short time of 3 months,
Yes.
while the bond market can be between 2 years, depending, or 3 years,
Exactly.
tenure.
But of course, like I earlier mentioned, we have treasury bills with tenors of 6 months, and
right.
also 1 year. But
All
the
right.
maximum usually is 1 year.
1 year.
When it goes beyond 1 year, it could be up to 2 years, it becomes treasury notes.
All right.
But in contrast to that, meanwhile, the treasury bills are issued by the central bank on behalf of the federal government. But the bonds, the federal government bonds and savings bonds, are issued by the Debt Management Office, the DMO, on behalf of the federal government.
behalf of the federal
There are two different authorities that are issuing these debt instruments on behalf of government. So, but one resembles the other in the sense that while the treasury bill matures usually in 3 months, that is, you harvest your returns in 3 months. For savings bond, even though a lot of them mature in 1 year, 2 years, or 3 years, but the interest payment is every 3 months. So that is where it resembles the treasury bill, in that it's like a treasury bill that is rolled over. They will pay this first 3 months, that is a quarter, then the next quarter they will pay interest again, you know. So it's like you hold a treasury bill that you are rolling over every quarter.
Every quarter.
That is how the treasury bond is structured. And the treasury bond is a retail instrument designed to cater for the investment appetite of retail investors, the small investors we are talking about. And they can procure this investment by contacting their stockbrokers, where they have their stockbroking accounts. And the stockbrokers will buy from them, either from the primary market when it is freshly issued by the DMO, or from the secondary market of the Nigerian Stock Exchange.
Let me quickly come here. How attractive is the treasury bills or this instrument really, especially the money market? How attractive it is?
Yes, there's almost no difference between the yield on treasury bills and the yield on savings bonds. Okay, because if you look at most of the times, they are almost converging at around a yield of about 11-12%. Generally, in the financial markets, the longer the tenor of the debt instrument, the higher the expected yield, because you have to make provision for what we call the risk premium.
The risk, all right.
So ordinarily, the yield on longer tenured bonds like federal government savings bonds should be higher than
The treasury
the treasury bills. Okay?
because of the time
Because of the time.
and the tenure.
So usually there is little risk premium built into savings bond to accommodate the risk premium, but it's very, very little. It's unlike what we have in the orthodox bond that are debt instruments that last for 5 years, 10 years, 20 years. Those ones have higher risk premium compared to treasury bills because they carry more risk due to the time factor, the time value of money.
Well, all right, thank you for your time.
It's a
David
pleasure.
Adonri is the Executive Vice Chair of High Cap Securities. Thank you for your time again.
Always a pleasure.
So we'll wrap it up from here now. We'll take a moment now. The show continues. Join us again.